Welcome to the TransparentFX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of previous monthly support and demand, which is now once again acting as support and demand. And as the market is testing this area, there is a good probability of seeing a potential rejection to the upside away from this zone. Now, if we look closely, we can see that the movement that the market created here was of an impulse to the downside, followed by a correction, then a lower low, then an equal high, and then another correction to the downside. Now, in a situation like this, what this means is that essentially we have the possibility of creating an inverted head and shoulders with the left shoulder here, head here, and right shoulder here. So at this point where we are is at the creation of the potential right shoulder for a move to the upside to be created. We can also notice that if we look at the movement of the market, this is an impulse to the upside followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market at the moment is testing the zone, which is in between the 0.32 and 50% of the Fibonacci taken on this monthly impulse, which is also lining up with this previous support, which is currently still acting as support, creating a confluence of support at this area, that there is the possibility for the market to potentially reject to the upside. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see a completely different scenario. In fact, we can notice how we actually have resistance at this zone. This is previous weekly support from which this rejection to the upside was created when this green candle was printed, which is now turned resistance. So immediately this is a problem because we have on the monthly support and on the weekly resistance. So if we go down on the daily, it appears quite clear that we currently have a bounded market. Essentially, we have a market which is bounded in between the previous weekly support, which is now turned resistance, which is this one here, which is also previous daily support, turned resistance. And at the bottom, we have this previous support, which is still acting as support, which is actually given by the support that we have identified at the beginning of the video by looking at the weekly time frame. So here on the daily, we're actually bounded in this area. Now, I actually did speak about AUDUSD a few days ago when the market was here. I explained all the reasons for which we could expect this rejection to the downside and the completion of this W formation at the neckline, which the market has in fact just created. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. However, in a situation like this, where we could be looking for the next potential move. Now, before we continue with our analysis here on the daily time frame, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. Now, if we check the data for the AUD, what we can see is that with the last reports, net positions have been increased. We went from having minus 51k net positions all the way up to now having minus 24k net positions. So we can see a massive increase of the net positioning here, reaching 54k longs compared to 79k shorts. So in a situation like this, where net positions are getting increased, you have to keep in mind that if you're checking the data for the AUD, you're actually already checking AUDUSD because all currencies on the spot are traded against the USD. So what we are checking here is already the data for AUD USD. This means that if we actually get a rejection above this resistance, at that point, that previous resistance would become support here. So we don't know if we will get that move because the market could easily remain in this range, and at that point, nothing interesting would be created on this pair. However, if we do get the break above this resistance, this previous resistance would become support, and at that point, also the weekly resistance would be broken. So we would have the monthly, weekly, daily, and also the COT data all aligning for a potential rejection to the upside, increasing the probabilities that if we do get a rejection and test of this previous resistance turn support, at that point, from here, there would be a quite good probability to see a potential rejection to the upside. So if we do get the break on the retest, how we could be approaching this move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you want to learn more, you don't know what I'm speaking about when I say valid entries and this kind of things, I really suggest that you go and check out TransparentFXTrading.com. Here, you have the possibility to gain access completely for free to the entire mentorship program in which you have all the courses with all the rules of the strategies, and you also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, directly from this page, you will see that you have the possibility to get completely free access to the mentorship program and register your account. So I really suggest that you go and check it out at TransparentFXTrading.com, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.